This is your weekend market recap for Saturday, June 18th, 2022. Let's go. Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well. This is Dan Max at EXPI Realty, aka the Trading Agent. And this is your weekend market recap for June 18th, Saturday, 2022. Hope you had a great week. I know we did. A lot of winning, lots of good trading. Patience paid off, and it paid off in spades. I hope people, again, in general, were safe, smart. Keep in mind, it's a bear market. It's going to get pretty volatile. Remember, higher VIX means up and down, big potentially. We are going into the end of the month. Tons of stuff going on, so please stick around for the video. I'm telling you, there's a lot to listen to. Again, we're going to zoom out on some bigger time frames and really examine some of the support resistance zones that you need to be paying attention to, because again, coming up, there's going to be a lot of action. The feds are trapped. There's a recession coming. Inflation's a problem. Tons of things going on. We have to be prepared, probability mindset, to see, not necessarily see, but to try to anticipate. Now again, because if you've been trading with us or following us, we're always trying to be one step ahead of the trade, hence how we do so well. Again, we're not following the crowd. We're anticipating the next move so that when the markets do move, we capitalize on it bigly. Anyway, again, if you need help, check out the Discord room. A link is in the description below. I appreciate everybody. And again, we're having some good conversations about mindset this weekend. You should stop in if you're bored. Bitcoin. All right. Said this a bazillion times. Head and shoulders top. We talked about choppiness wasn't necessarily good because you couldn't make new highs compared to here. You broke down. You based here for about a month. We talked about this action that it either could be a good base to break out or it was done. Well, again, if you use the support equals resistance mindset and you put your stops tight below, I mean, you could put them at 27,000, whatever number you wanted to put it at. It was pretty obvious that if it broke, it was going lower, and if it held, it was going higher, just like here. Because again, here's the zone. Let me stretch it all the way back. You can see this area mattered. And again, if you're not familiar with support resistance zones, please check out the Back to Basics series. There's a nice video about this. And again, this is stuff you look for because, again, ultimately the market has memory. People get in at certain prices. People execute their actions at certain points. So they have to be cognizant. Again, pros use stops. Joes don't. Anyway, so this area matters. So how much lower? Again, people keep asking me that. Bitcoin's not rational. So put a price and then take 10 or 15% off of that downside price target, and you can expect that. Me personally, I'm thinking somewhere below 10,000 because, again, it just seems that Bitcoin does these big corrections, and under 10,000, I imagine there's a lot of people who are buying, who would say a big round number like 10,000 would be where their stop is or their pain point max out. So below that is where I would think it would be. Make sense? Duh. Oil, you're welcome. We talked about the lower highs on the futures. Talked about this nice little channel. Back test the channel. Remember, we talked about this on Thursday. Everyone's like, oh, you know, it's probably going to bounce back high. I'm like, watch out. Once you saw lower highs, right? People are wondering why. Why are you pressing your shorts on oil? Why are you taking some money from drip and shorting oil? well, folks, you have a lower high confirmed, right? And you're cresting. Now here it was supposed to be support. Didn't question that. And again, we'll see. You'll see more of this in the USO. Stick around again. But now what? Probably should come back down into sub 100. I've said also too, I think ultimately if we are in a recession and peace breaks out, which, you know, who the heck knows, I still think oil's on the future price with all the backwardation and all of the dollar demand for oil. I mean, it seems logical. Let me draw it again. Here it is. Let me stretch this out. Somewhere in the 60s, maybe low 70s. Now, again, we don't know until we get there. That's the problem with people putting price targets on things. You have to trade what the market's going to give you. And again, having price targets fundamentally on a spatial, bigger picture, yeah, I get it. But this is what screws people a lot, is they wait for an exact price target, and that's the problem. You got to be aware that it's not like that. So if we go back to party liquidity, never-ending quantitative easing, levels, you can see somewhere in the 70s to 60s. And again, put it on a recession and maybe all of a sudden something changes, it could go a lot lower. But also too, it could just be, again, as I've said, this could be like 2004 where oil chopped in a big range before it went bonkers in the 2000s. So keep that in mind. These are all the probabilities you have to weigh. Again, when I short oil, I'm not shorting it to zero. I don't see the same kind of event from COVID happening where oil demand went to almost zero instantaneously. I just think with a recession, like every other recession, oil demand destruction, people can't afford multiple, doubling and tripling gasoline. It's just not possible. All right, TLT. Hello, friends. This is what we've been talking about. The pair trade with oil and TLT. We talked about this a bazillion times in the chat room, said it a few times in the video, that if oil is topping, bonds should be bought. Yields should come down. Deflation, recession, people buy bonds, people want price stability, they just want their money back, and they don't mind a little bit of interest rate. Again, seems to be playing out. We talked about this range down here in the 112s, and then even we went a little lower on the monthly. We hit it, boom, long wick. Now, if you're in the chat room, we talked about this during the FOMC. This is a novice gap. You could start buying it down here. I mean, I personally waited. I know others who did, again, if you were expecting a move up into the 130s to 120s, do you have to be perfect at the bottom? No, you're not. Again, because you don't know where the low is. You don't know whose pain point has to be breached to puke up to force the bottom. Who's the market maker trapping? You and I? No. They're trading big whales. Big Willie whale style. So now what? Right? Fed day, we talked about this gap up. Then you filled the gap, and that honestly was the best day. And it's crazy, there's a doji here. You can't even see it from Friday, but it's right up against the trend line. We talked about buying it on this day aggressively. Oil was breaking. It was like, not breaking, it was consolidating. It just felt like the right trade. So if you took some trades, the safest thing I think the market will rally at some point because bonds will be bought and the yields will go down. And so if that is the case, maybe the market does rally. But again, bonds have gotten crapped on. Keep that in mind. Think about for the quarter. From April 1st, 130s to 110, 108s technically. Okay? Expect the rally. Now again, don't chase. I say this all the time. Oh, Dan said buy TLT. Well, I didn't say buy it at 112. I didn't say, but I'm not going to say buy it if it fills the gap. Try to get it down here. And if you can't get it, then you move to another trade. Because again, you need to have the ability to swing trade and withstand pullbacks. I don't want to see people buy something and then have to withstand the bigger pullbacks if they don't have to. Now, again, people say, well, you took one in oil, and it's like, yeah, because the risk was worth the reward. I don't trust bonds long term. This is a swing trade for weeks. I think ultimately inflation is ingrained. It's not transitory. So how that plays out means what? That, yes, I like TLT, but I don't love it. I think it's a safe place to go and hang out. The dollar. A lot of people are really trying to get what I would call, they're trying to get real picky about the dollar action. I see the uranium, gold, silver bulls going, dollar's done, it's over. I'm like, no, it's not. Big monthly channel, you are breaking out. You should get up into the 29s on the UUP. Again, if the dollar is going to die, it's going to die with a kind of what I would consider probably like a bottle rocket blow up first, because then people will liquidate their dollars. I hope people understand that. Like, they're not going to sell it's the same thing as how like Tesla peaked, how the market peaked. It rode up to highs, the prices where it literally forced people to sell. So if you've never even thought about it from that perspective, please take these words in and think about it. Before gold, silver, uranium, whatever material name you want to play the launch on, the dollar needs to peak. The dollar's not peaking. It's making higher highs and higher lows. So people keep going, oh, you're an idiot for not buying gold, silver. I'm like, no, I'm just waiting because I know what'll happen. When the market pukes, the dollar will rally into that puke. Okay? Okay? Okay. Same thing. Here you go. Here was that dollar rally. Boom. Then you bought the metals, and they went ape snot, if that's actually a word. Okay? Do you see what I'm saying? Wait, dollar. We need to see the dollar blow up first. Up. So put this in your brain. UUP up. Blow out up. The VIX. Here we go again. Talked about the volatility compressing under the trend line. Again, what are you seeing? It's a bear market, literally since November. You're saying higher highs, higher lows. Now, again, people say, well, that wasn't a higher high. Fine, whatever. The VIX is staying elevated. What does it remind you of, Dan? Well, guess what? It reminds me of the 2007, 2008, where the VIX, here you go, it's sustained before the final blowout. Yeah, which was in October of 2001. If you don't know why October's typically are crashes, stop by the Discord room. I'll explain it. Maybe I should do a video on it because there's a lot of factors that obviously play into money. And here you go. Here's the 2000s, and this was remember, it was the tech wreck. It wasn't a SPY wreck, but it was just chop, 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 higher highs, higher lows. Oh, but Dan, you had a lower high, lower low there. Well, okay, fine. Get my point. It was a bear market. So now look at us. What do you think is happening? Chop, 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 boop, boom, blowout. This was COVID. Chop, 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 blowout. It's coming. When? When? That's the special question. I don't know. So this is why I keep telling people, you can swing short from extremes at highs, but do not stay bullish long term. That is the recipe for execution. And I mean execution because the market's going to take you out back and put a bullet in your head and blow you out. SPY. All right. We're breaking out of the channel. Maybe it starts smoking down into the end of the month, end of the quarter. Doji day on a Friday, not surprised. OPEX, post FOMC. Now what? This is a lot of down. I hope people realize that. Now, again, it doesn't mean we have to rally back huge, but now the risk is not worth the reward at a certain point. Now people go, oh, bear market, let's go look at it, Dan. And it's like, here, do you want to see some big red months? I get it. But look at that. Big red month, bounce. Big red month, okay. But this is, remember, October is the seasonal pain period. The summer is choppy. Here you go. Here's June of 2008. What happened? Chop for the next 2 months. And that just totally drove people crazy. And now that you've seen it, what are we expecting? If the market gets pulverized near term, which it seems to be. I mean, again, I know the VIX isn't that high, but again, keep in mind, 415 down to 360s. That's a big move, People are going to be freaking out. Probably CNBC is going to run a special markets in chaos all week when this happens. And then what? Probably bounces. Now, again, how aggressively do you want to play the bounce? Or do you just move to cash and wait? I'm buying bonds. I'm going to continue short oil because, again, I'll show you why oil continued lower in the market, bounced in 2008. Keep in mind, we'll get to that shortly. But at this point, if you have shorts, please, as I always tell people, the more you're up, the less you own. You don't believe in certainty. You don't push. You don't push all the time. Again, short here aggressively. Take profits here. Short here aggressively. Take profits. Okay? Short here aggressively. Take profits. Short again. Take profit. Do you see how this works? And again, keep in mind, bear markets have limited downside. The bear market rallies are awesomely aggressive up, but you can play them. Be careful buying options because remember the IV, implied volatility, the VIX are spiking. So your options are going to get murdered when the market goes flat and sideways because the VIX will compress and your IVs will come down. So just be careful buying calls, especially out of the money. Do not buy out of the money calls. And if you do, pretend you can lose them. And not actually pretend, assume you can lose them all. Like everything on that premium. Say you buy some out of the money calls on Apple at 140 for $2 when it bottoms and it gets up to 140. Maybe not. But those calls could go if it doesn't. And even if it does, they barely might move. You will not make the delta, which is rate of return, for those options that you should. Qs. Here's the reason why it's a bear market. Here's why probably TLT's bottom. Here's why tech is oversold. As we said, bear market starts when you break under the 20-month. Confirmed. We got it. Again, big red. Look what's coming into play. The 50-month moving average. The 0.382. Don't be surprised when it bounces. Now, again, people are like, oh, you're taking off your shorts early. Because I have been the idiot who goes, it has to hit that price perfectly before I start taking profits. And then it rallies back. And then I hold. And then I give up all my profits because I was waiting for one price. Don't be that guy. We all learned that lesson. Take profits as they come. Trust me. You're going to be thankful. Because, again, you might say, well, I could have made more money. Then you're not thinking from the market perspective of how a professional runs a business and trading. I'm always more worried about what I can lose And when I have profits, I don't want to give them back because again, it's like running a business. We're not sloppy here. We don't like gamble. And we go all in and assume things. Like we try to be safe. IWM, we talked about this hitting the 2018, 2020 high ranges. I'll just pull it up on the monthly. Again, this is the weekend recap. We do the monthlies. We look at the weeklies. 2020 high, 2018, sorry, 2020. We're in this zone. Now what's the downside target near term? I think you guys can see it. It's here, we're at the 0.382. It's somewhere in the 160s. Could it go lower temporarily? Of course, it could be a wick. Just remember that. It could be a wick. It happens. I mean, that's what blowouts do. They create wicks. Gold. Every day I get DMs. And again, I honestly expect it. And I know and this might be actually the contrarian sign, is when the market does blow out, knocks gold down, and I hear no one talk. And they go, you're wrong about gold. Maybe that's actually probably what my note to self. When everyone shuts up. About gold. Because again, long term, I don't disagree with the thesis. If you've been following me for any period of time, I literally said this was a cup and handle with a head and shoulders monthly bottom. Meant big move up. Well, now what? You get back to the highs and now you're chopping. If you study the early 2000s before the major lift-off, you can't really see it here with GLD because it wasn't formed until 2004. It went like this, chop, 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 after a nice pop. Booyah! Coming. It's coming, man. Yeah, it's coming. And again, here's my arrow. You can see where I got it pointing to. Wee! Tee-hee-hee! Yeah, somewhere up here. Easily. Easily. So I'm a bull long term. Bear near term, you couldn't pay me to buy gold other than physical at discounted or actually at paper prices. If you can get gold at $1,800 an ounce, buy some for me and I'll send you a check. Send you a check. No, I'll send you some Bitcoin. Just kidding. No, I'll send you PayPal. No, I mean, gold at the paper price versus this, it's bullshit. Talked about this. I think it gets down to the 160s, 150s. Why, Dan? Well, again, support equals resistance. Here's your support zone. Here's the old lows from 2021. Here's the chop zone. Here are the fibs. It makes dollars and it makes sense. Between the 0.382 and the 0.5. That's all you should expect. Max. And I know that's my last name, but maximum. Like, here you go. Here's that start of it. You could get back to here. Let me just draw another line real quick. Do not be surprised if it came back down into the 150s. Okay? We good on gold? I love gold long term, but don't be that guy. Same thing with silver, because we're going to run through a lot of names where it's like patience, and it doesn't make the video very exciting for people who actually are patient, because they're going to go, ooh, I'm going to make so much money when I wait this out. Again, silver does great right when it blows out. Here you go in 2008, the blowout, October. Remember October, VIX spike. Are you starting to notice a theme here that Dan's starting to think October is probably the best time to buy metals? Let me sip some coffee. Silver, what now? Nothing, nowhere. Just move on. Go to cash, short stuff. Buy things that are actually going to rise. Because again, GDX, same thing. It's just, I love it down here. If you're telling me this was, again, we bought this here and then loaded the actual boat monetarily wise. Remember how I'd say don't chase? See, you get that kind of crap. See, don't chase. You retest the lows. Oh, it's so bullish. No, it probably does this crap with one extra low. Where's that low? Again, people asking, probably in the mid 20s. 100 month? Oh, but it's holding channel lows. Come on, guy. Come on, friend. Come on, girl. Come on, whatever you identify. You can be a dinosaur if you want. Hey, whatever. It's not going to make sense at the bottom. Like, there's no rationality. It's no smooth. Again, here was in 2008. I still remember this. 55 down to, like, 16? I was like, gold's going higher. The feds are going to print. The feds are going to print. The feds are going to print. Hey, cat, stop it. Sorry, she's messing with something. And what happened? It went so much lower than I thought was possible. And then what? Pew! That's what you're waiting for. You're waiting for the blowout. You're waiting for the haters to stop DMing me. You're literally going to go on to FinTwit, gold, silver, uranium, and it's going to be a ghost town. And everyone's going to be like, this is the moment. I give up. I can't handle it anymore. blow my brains out. I'm so leveraged. I've lost all my money. And again, they didn't watch the videos. They didn't see it coming. They never traded aggressive, or they've been following gurus who are novices. What happens? They blow out. I'm trying to prevent you from blowing out. I'm telling you, wait. Same thing with GDXJ. Probably could get somewhere back in the 20s, which would be phenomenal. Phenomenal. Upper 20s, mid 20s, lower 20s. It doesn't matter. But if it's the blowout, it's awesome. AG. We talked about this. You guys and gals have been around a while. Talked about buying it in the 9s. Look at that. Booyah. Up to 14. We said you got to get the heck out. Couldn't make new highs. Bam. Love it. Love it. Still. Oh, but it could it get to 5? Possibly. Again, when the blowout. Look at that. I mean, look at that. Again, all you needed, and this is what I tell people, all you needed to do is trade one trend well that is going aggressively in your favor. And you can just buy the dips and buy the dips and buy the dips. Oh my God, buy the dip. Oh my God. And then wait for the blowout. You get it. Remember, the straight line move is the end of the move, not the beginning. Oh, I love trading because it's not that freaking hard. It's all repeating patterns if you study them. AEM, loved it. Again, it looks like a left shoulder, right shoulder head. Let me just put this on here because I want people to see this. Probably going lower. No way miners are going lower. Okay. Okay. We're still early in a bear market, y'all. Still early in a bear market. And here you go. Here's an example. In 2007, ran up, looked fire. Then you bought it. And then what? Much higher. Again, if that laugh is basically a parody of the memes that I've been seeing online for cops who catch people putting ways, like identifying where they're on a ways, and then the video is the cop is sitting there going, "Oh, I'm not there." Whatever. Stupid joke. NFGC, again, love it. Absolutely love it. But hey, guess what? I can't buy it. I think this company gets bought out. Sprott is putting down big bucks. If you followed me with KL, and if you are, remember KL, was it Kirkland Mining? Every time I think of Kirkland, I think of Costco. If you know what I'm talking about, throw a like in there because you know what I mean. Kirkland Gold. It did amazing and it got bought out. And we bought it. We started buying it in the 6 to 8 range. And we traded that pretty well. Now, I didn't get every penny out of it, but hey, you could have made a killing trading it. PAAS, same thing. Love these names. Love them. But I don't love them now. They're like, it's like when waiting for your kid to fail so you can, cuddle them and then love them even more. That's what you're waiting for. These are your little kids. They're all going to fail. And then when they blow out, you can come in and say, I love you so much, and hold on to you for months, years, trade them accordingly. Again, when the trade starts in gold and silver, you might get really annoyed following me because I might just trade it only. There might be nothing really to pay attention to because, again, it should outperform tremendously because it's underperformed. Keep that in mind. We will own some of these names. X gonna give it to you. Yeah, we talked about buying this and trading this down here, and it rode up and it hit the 200 month. And we said, you probably need to take profit because it's a bear market. And look what happens. Chop, 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 chop. Here you go. Here was the action before. Look at this. Look at this all the way into 2000s. Booyah! We are expecting that. We are expecting another base and bazooka move. That's why I put X on the radar. CCG or VALE, same thing. Do you see the recurring theme here? It's patience. If you don't have it, you don't get the reward. VALE, I remember when this thing came out and it started going nuts, and then 3 for 1, then 2 for 1, then 2 for 1. Look at that. 2 up to 45. You do the post splits, you do the math. It was a big freaking move. Base, 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 base. Here you go. But the thing is, it's actually acting stronger. And this base is bigger, so it probably means you will see a triple-digit value on this company one day. But if you buy it too early, your account balance will see 0 digits. No, I'm just kidding. You won't win. Watch for the channel lows. I mean, I'm even thinking 11s again. Sounds crazy, but support equals resistance. Let me bring this back. Somewhere in that range. 12, 11s. If you see that, you call me. Actually, I'll probably call you if you're following. And you got it. CCJ. Again, man. Uranium folks, I love them because they remind me of myself when I was stupid. And when I say stupid, when I used to consistently lose money after making money after losing money, I'd go up and down. I was a yo-yo of leverage, winning and losing, winning big, losing, and then going, what am I doing wrong? Oh, you're trading off of your own emotions, not the evidence. The evidence says uranium stocks don't do well in a bear market, but after it, they come out, they do well. What again? Why put this on your radar? Yes. Was it who says that? Yes. What was it the commentator for the New York Knicks, Marv Albert? Yes. Yeah, here you go, head and shoulders. And anyway, point being, acting well. Do not be surprised. And I've said this, if it's at 16 to 18, you buy it then. And people go, oh, well, you say don't buy targets. Well, if it gets down there, what's probably going on? Right? All right. Same thing with Eero by Calvin Klein. Yeah, it seems obvious. Love it. Copper company. IPO'd recently. Strong balance sheet. Just let this thing come on down. Come on down, you hear? And if you let it, if you're patient. Now, again, we loved it here. No. Loved it here. Didn't trade it. I mean, that was a nice trade, though. I mean, 11 up to 17, 16. Are you seeing the theme? Again, if you watch my daily videos, you start realizing, like, all right, this guy is showing me the evidence of why to wait, but why can't I wait? I don't know. That's you. That's mental. That's all mindset. Because, again, I'm waiting. Could I be wrong? Here's the preface. Could I be wrong? Yep. Can I get in later without pain? You bet I can. I mean, again, I can come back at any point. I just don't want to hold something that's going to go nowhere and chop. Mosaic. We love it. Love this company. Ag names. Inflation is the future of food prices. Where are we going? Let me remove that guy. Where do you think it's going? Doodle-doodle-doo. Probably somewhere in the 40s. Which would be a 50% haircut and something that's earnings is doing great. And what? It's also, I mean, they have pricing power. Pretty wild. CF, same thing. I mean, you could technically short CF if you wanted, if you think it's going lower. I've said I think it's probably getting back into the monthly, somewhere in the 70s, maybe even down to the 40s. Or sorry, 50s. I apologize. What do you want, cat? No, I mean, literally. Like, that seems rational. But people are like, oh, it's irrational, whatever. Tech, now again, this is, if you want to play the easiest trades, again, you short the crap out of these things on every pop, because once that bull market and tech ends, they become what you saw those, like, you saw the backside of those material charts on the monthly, right? That went just to almost look like flatline dead. That's what's going to happen to AMD at some point. People go, well, look at the chart, man. It's pretty oversold. No, I look at the monthly and I go, whoa, there's a lot of altitude between that and the ground. And the ground is probably single digits. People go, no way. And it's like, maybe. It's not like the first time. It's not like the first time this ever happened. 48, $4. 42. Penny stock land. Penny land. Could AMD go to penny land? I don't know. But again, at this point, short pops. And when I say short pops, aggressive pops. Not a little pop. I mean big pop. Big papa. Big papa coming for you. Now again, if you're short this like we have been and recommended, the more you're up, the less you own. Because again, you know at some point, we're getting down into our targets. What did I say? Somewhere in the 70s? We're getting down into our targets. Now people go, oh, you said targets, you don't trust. No. Again, I use these if I'm right. Now again, like I'm right in the trade. GDX targets, I have no clue what the downside is. Because it's in a choppy mess. We're in a downtrend in the AMD. Clearly, we've been trading it. It's clear that this is the first support zone. Take some money. People are like, oh, I'm taking money here. I'm like, why? Well, I'm taking money here. Why? Taking money here. Okay, I can see that. Now you're back at the lows. Now you're making new lows. This is where you should be taking money. Apple. Again, we have been murdering Apple in a nice way, if that's the best way to describe it. Again, tech, get off of it. Shorted up here. Shorted up here. Actually shorted after earnings at 170. I don't know if you guys remember that. That was an awesome. Their earnings pop and then went tee. And then what? Now we're back at support. Check out the monthly. I would think somewhere in the 120s would be the first support. It's the old channel. Let me draw it for you. Nice and clean for you. 0.382, somewhere in this range. That would be my guess. And if it doesn't get there again, I mean, I'm taking profits. Actually, been taking profits and been moving them into oil names because, again, we're getting there soon. But that's the stuff to me that I think has the best downside near term. Good old Meta, Facebook, MetaBook. Look at this thing. I mean, look at this repeating pattern, y'all. Channel. Waits for the gap. Channel. Waiting for the gap. That's my guess. When is their earnings? Somewhere in July. That's earnings season. Again, people don't understand how this kind of move does not sustain. And when it goes parabolic, it doesn't matter if you have Zucker, Elon, or Donald Trump as your CEO. You got problems. Because the company, again, competition's company, margins can only compress. Best of all worlds was priced in. Roblox. Like it, down in the low 20s. Volume price analysis. Here you go. Buy signal. Pop. Take some money. Now what? Remember, retest. You even at blow-offs, you had a retest, right? You had a retest. Keep that in mind. So I think if you see it down in the low 20s, I think it gets bought out. Who buys it? Microsoft, maybe. Somebody needs their gaming. They're creating a whole generation of addicted kids to Roblox. Sad to say, but it is what it is. Tesla, we've told you you had to get out during this month, and you didn't. And now you're asking me, what do I do now? Any pop you need to sell below the 20 month. This is a big blow off. Now, again, people say, well, they're the future. The future is priced in. Now they have to execute. And I think it's going to not be easy for them to execute. And the stock is going to go which direction? Down to chop land. Now, again, we've talked about this chart is just so dirty. The only thing that was easy was this channel blowout and the short. Then again, here's your retest or lower high. Boogh. And here you got lucky. I mean, we talked about that. And honestly, I shorted, took $100 because I thought it was too much too fast. I didn't even get a bounce. It was like I took a short, watched the train. I got on the train. The train hit the first stop, and I just jumped off the train. It's like the train's going from New York to California. I jumped off at in Ohio. Maybe not even Ohio. Pennsylvania. Philadelphia. I don't know. Whatever direction. I guess that's not Philadelphia. No, more like probably West Virginia or Kentucky. I jumped off. Anyway, oops. You lose sometimes. You're not always right. But I'm just telling people, please don't own this for the long run. Like it's blind, like you're blind, like you are a part of a cult. You are drinking Kool-Aid to believe that stocks only go one direction forever. That is by far the Kool-Aid that will kill you. And if you don't realize that, I don't know what to tell you. Here you go, fundamentals. And then speaking of Tesla, here's a great company, fundamentals. Look at this company. Oh, you couldn't find a seller. We're just murdering the real estate market. We have everything you'd ever need. We have what? Remote learning. We have cloud-based everything. You don't ever need an office. Our commissions are way lower you pay to the brokerage than any other brokerage. Oh, did that change? No, actually it's gotten better. And actually we've added more agents. We've grown bigger. We've done better. And then what? Lower. I own the stock personally, but I've been getting it in this level and this level. I own it for working for EXP. Full disclosure, don't really care. Again, I probably should be selling it, but it's at this low and it's free stock. I mean, I didn't pay for it. My cost basis is technically zero. I am rationalizing a loss. Put a bullet in my head. UTHR. Here's another winner we've picked for you if you've been paying attention. Talked about the W bottom. We talked about volume price analysis. Here you go. Here was overwhelming market maker demand. Chopped. Boom. Blew out on the earnings. Not on earnings. I think it had an FDA release. Said it probably pulls back to here. Now what? I don't know. If you didn't take any money on this, shame on you. Now what? I don't know. Could it M out? Probably. Could it go higher? Maybe. But if you took some profit, you're playing with house money potentially. All right, oil. Here's Johnny. What did we say? USO looks like it's making a higher high. Stop it. Go back to the futures. Talked about the 20-day possibly holding. Did, and then it failed. This move, again, I'll show you on the monthly. If you think USO is not a good shorting mechanism, It absolutely is. Because look at it. It went from 347 up to 9 something. Yeah, 970s, 940s. Failed. Dropped. This is a crappy ETF. It's great to short. And now look at the liquidity at the lows. Remember I talk about reverse splits being the possible time for bottoms? Reverse split. $16 up to 80. What is it? 93. Sorry. 92.50. Whatever. Now what? Tee hee hee. Look at that. Volume. Long wick. Retest of a high. Breakout. Failed breakout. Failed breakout, Johnny. You can see the failed breakout from 88. Now you're 83. Dan is aggressively short because now what is this? This is all a bull trap. We talked about the anomalies up here. We talked about this is the liquidity event where actually the market makers unloaded all of their oil potentially and had some left over and they drew it up higher. Now again, I'm not expecting oil to go back to zero, USO to go to zero. No, it's just a swing trade. What's your target, Dan? I said 60s and 70s. Minimum, P minimum. XOP. Now this was another hard one. Again, started short in the 140s, 150s. People were like, you're crazy, man. I'm like, okay. Went on vacation and it totally, I mean, I think it literally lined up. What a day. Yeah, I left after my birthday, my wife's graduation, and it went, woohoo! Traded around it accordingly. Tried to manage it the best I can. Knew that this was going to be a dumper. Now what? Now we're taking profits. I said watch for the 130s, the 120s. But Dad, it didn't hit 123. I know it didn't. But guess what? If this actually ends up being the bottom, I'm going to be real pissed that I didn't take profits. Because now we're buying goosh. Zagoosh. You can buy it as a hedge. Let me pull it up. I mean, it just basically mirrors the XOP. I mean, you could probably make 30, 40 points off of this while you hedge. And also, too, if drip goes lower, what do? You stop out of this and let drip run. It's really that easy. I mean, again, these ETFs are really crappy in the sense that they don't mirror the price. They have devaluing factors based on the way that their ETNs and ETFs and all that crap are built and designed. Again, I don't need to know how to make sausage. I just know it's sausage kind of thing, right? And at this point, I think it's a buy. Now could it pop for 30, 40 points? Yep. I'll take it. I'll take it because I know we've made some good money shorting this. If you bought puts, congratulations. If you bought puts, you were dancing. Now what? Let it play out. Let's go through all the oil names just because it's the weekend. XLE talked about that doji being something. Now you've dropped. You're getting back to the, again, keep in mind, 92 down to 73. That's a big move pretty quickly. It's probably going to be buyers. Now, again, I don't know what to tell you, but guess what? This is a bearish engulfing bar. What I think usually would happen, and you've seen this before, if you look at some of the highs, it's not really a total. Here you go. Bullish engulfing bar. Then can you see this wick? You had a partial wick that comes inside of it. I'm trying to find if there's any other kind of engulfing bars, because typically that's what you see at the lows and highs. Let me see if I find any more. That was a left-right combo. I'm a big fan of those with a doji in the middle. No, I'm not. Again, you can go look for yourself. And what it basically is when you have an engulfing bar, sometimes the next bar will have it'll try to half back, quarter back, third back into the previous candle. If you don't know what that means, here, I'll show you again. I apologize. Where was that candle? Oh, it's on the monthly, you silly monkey. You cheeky monkey. Right here. This was an engulfing bar, right? But notice you got some, a half back. 69 to 58, which is 6 points. Yeah. 63. Yeah, exactly. So, yeah. You see what I'm saying? That's possible. Keep in mind, oil's hot. Everybody loves it. It's not going to probably die instantly. It's the same thing as Tesla when it bottomed. Remember, it made a rally back and then how strong a rally? I don't think it's going to be that strong because we have gone uber perpendicular. Uber. Keep in mind, I mean, this ETF was at 23 and ran up to 93. They monster move very quickly. Okay. Anyway, ExxonMobil. If you shorted this in the 90s to the hundreds like we did, you have to take profits here. Please, I know it's probably going lower, but please don't be surprised when it bounces and then you can add. Now, again, how much are you taking off? I've told people this all the time. It's all relative to how much you think it can bounce. If you think the bounce is a 50-50, then maybe you take half off. If you think it's only a third, like a 30% bounce, then you take 3. But please don't bury your head thinking it's not going to bounce. It's going to bounce at some point. We just don't know where. So you take profits. What else? Oh, man, there's so many of these. UNG. Again, this is why we're short oil again, because we know natural gas has peaked. Look at this. Channel up, broken. I mean, there's really not much to say. Again, short these crappy ETFs. Let's get into a few of the other fun names in the sector because they've been pretty fun. Valero, I was laughing at people going, you got to buy Valero, 27 times earnings with the margins thinner than a piece of paper. It actually, this is what's crazy. I wish I was around when this was, I was actually at my computer when this was topping. Channel high. Oh my God. You sometimes they're that easy. And when they are, you're thankful. But that would have been a great short one. You could have 145 down to 112. That's a nice move right there. That's right. Let me go. Oh, I got something I need to remember to do. Bang. Let's go Chevron real quick. Blast through them. Talked about this anomaly right here. Little higher high. Boom. Now you're back at the trend line from previous trend lines. What is this thing? Okay, that's a random trend line. Still bounced on it. That's why sometimes you leave your trend lines. FANG. Everybody loved this. Fail. 200-day. Probably going to bounce the first test, right? EQT. Oh, this company's doing amazing. Yeah, whatever. We said what? Drew, if you're here, calling you out. We said what? Maybe a head and shoulders. Maybe here comes the right shoulder. Here comes the right shoulder. How high, how deep? I don't know. But if it gets over 40s, maybe start layering in. PXD. Here you go. Said short channel highs. Oh, you're crazy. No, you're crazy for not listening. Now what? Here you go. Come on, little brother. Let's draw you up. Probably somewhere in here. Since the 200-day is right there, why not just... your driving skills. You need to learn how to drive this program. Here you go. 200-day. That's where you should expecting. Oh, you should buy the XLF as a hedge. Now again, maybe... Again, I don't want to buy any company. I don't want to buy banks. Please, don't ask me about banks because, again, they take on all the counterparty risk in the economy. When they could blow up overnight. I don't think the oil names will blow up, especially the big ones. USO again. Let's go back to the monthly because again, if you're sticking around, here we go. June top. There we go. Look at the candle, the following in July. Remember, oil dropped even as the market was bouncing because keep in mind the market was getting pulverized because oil was rising. Engulfing bar, and then you bounce back a third of it, I guess. I don't know. Quarter of it. You see what I'm saying though? So expect the oil bounce. When I'm not there yet. I think we still have, again, because the month ain't over. What do we say? 70s and 80s? Oh my God, there it is in the 70s. No, again, if you know what's going on, you expect this. This is why I say these things. It's probably an engulfing bar. Then it chops back. Oil is the easiest short right now because the market will love oil to drop. All right. Hope you had a great week. Again, long video. Love you guys. And again, think about why this is a group thing of ultimate experience to learn. I'm not sitting here telling you what to do. I'm giving you advice. But also too, you have to remember if you're mentally not sound because you've been beaten by the market or you've had extravagant losses and you just don't you're just out of your mind. And I'll end it with this because I thought this is one of my notes that I printed. Not printed, I created. And check this out. We force ourselves to self-destruct to preserve our health, sanity, and relieve the stress, leading to addiction that could lead to addiction to the rush if we don't act. Acting, self-awareness is the only solution. So what does that mean? You literally will self-destruct and do the wrong things just so you can blow out your account so your body and your mind can be free from the pain. Especially if it doesn't feel like it can win. It actually gets worse. And so it leads to an addiction too if you don't know how to overcome it, because then you'll try to put money back in and you'll do it again. And your body and mind will literally put you in that direction of fail, 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 fail. Now that we're acting and you're in self-awareness, meaning you, if you're reading this, you can fix this. If you do not do this, can't fix this. I'm just telling you. All right. Have a great weekend. Talk to you soon. Happy Juneteenth. Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.